Hey everybody, welcome to the show. Welcome to the show. Trying to get all my stuff going here, as usual. As usual. I go live and everything rearranges on the screen. It's like, what the heck? What the heck? Anyway, welcome to the show, everybody, and all my channel members. Goose here for the first time in a while. Lieutenant Colonel, good to see you. Mark, Rob, Sergio, David, Frank. You've been having a good week, eh? Frank, Gaten, Donald, Arturo, Don, Will, Mad, Svenborn again, Scott, Hugh, David, Skaggs, Dan, John, Darren, Diane, Terry, Ted, B, Captain Sledge, good to see you. Be like water. Yeah, welcome everybody. Glad y'all are part of the same team here. Let's get it, shall we? So, I brought a little something. The thumbnail for the video didn't tip it off. Well, just when you thought 2025 couldn't get any like weirder, crazier, I mean, maybe we just expect more crazy. Old Trump decided to throw a wrench in the gold market. And that's got everybody from the Swiss bankers to your local coin shops scratching their heads at this point. And by wrench, I mean tariffs on gold. Because apparently now we're taxing shiny rocks, right? Well, let's break this all down. So the Financial Times dropped a bombshell report that caught literally everybody off guard. I mean, pretty much everybody. The U.S. government just slapped tariffs on 1 kilogram gold bars imported from Switzerland. Now, wait a minute, right? Wait a minute. Gold's supposed to be exempt. It's the hedge. It's the money transfer, right? It's transfer of wealth from this trade war nonsense. Yeah, congratulations. You've been paying attention to economics. But gold has traditionally been classified as bullion, which means it gets a free pass, right? It's money. Or at least it used to be. Now, here's where things get kind of spicy. This happened just days after the Swiss government basically got the diplomatic equivalent of being left on red by the White House. They went to Washington hoping to get, this trade deal worked out between Switzerland and the U.S. And instead of handshake and photo ops, well, they got tariffs on their gold bars. Oops. And now, why you should care about this beyond the obvious entertainment value, more political theater, as they fumble around with decades-old precious metal policy. Well, Switzerland isn't just some random country that happens to have nice chocolate and watches. They also are the world's largest gold refining hub. When you buy gold, whether it's a coin or a bar or jewelry, there's a pretty high chance that at some point, some of that gold passed through Switzerland at some point on its journey to your grubby little hands. Think of Switzerland as kind of like the Amazon warehouse of gold. They take raw gold from mines around the world, refine it into those beautiful standardized bars that you see in all the movies, Die Hard or whatever kind of comes to mind when they stole all those dump trucks full. And then they ship them all over the world. Now imagine if Amazon suddenly had to pay extra fees on everything they ship to the U.S. That's what happened with China, right? Spoiler alerts. All those costs don't just disappear. They get absorbed and then passed on to consumers. So you're like, wait a minute. This was just the big gold bars though, right? So here's the fun part. Nobody saw this coming. I mean, nobody. The entire bullion market got blindsided, harder than a pedestrian getting checked while they're watching their phone as they cross the street. And your market participants, dealers, refiners, they all assume gold bars are going to be treated as bullion and remain tariff-free. I guess that was a oversight on their part. So what does that actually mean for your portfolio? Well, if you're holding gold as a hedge against inflation, currency debasement, or just general government incompetence, which, let's be honest, that seems like a solid strategy these days. you might want to pay attention. First, this is going to make gold more expensive in the US. And it's not just the 1 kilogram bars that, I mean, they can trickle this baby down, all the way down. Because gold itself is going to be worth more because of the taxes. And if government can tax it, it's like paying extra for the same hamburger at the restaurant. I mean, we've discussed these tariffs ad nauseum, right? The burger didn't get better, it just got more expensive. Now, this creates what economists love to call a market distortion. Instead of gold flowing efficiently from refiners to consumers, and stores of value based on supply and demand metrics, now we have artificial barriers to the flow of gold. Swiss refiners might start looking for ways to get around these tariffs, maybe shipping through other countries, focusing more on the non-US market. Meanwhile, US refiners might suddenly become more competitive against the Swiss refiners, not because they got better, but because the competition got handicapped on the imports. Now, let's zoom out for a second. This isn't really about gold. It's about the ongoing trade tensions and the weaponization of economic policy. I mean, political theater. We're living in an era where governments are increasingly willing to use trade as a, kind of just like a tool, a crudge hammer, whatever you want to call it, in diplomatic disputes. Switzerland didn't play ball on the trade deal, so now let's tax them where it hurts. The gold exports got taxed. And it's like international relations conducted by a vindictive HOA president if you live in a neighborhood. Here's the kicker. This could just be the beginning, right? I mean, if the U.S. is willing to slap tariffs on gold from Switzerland, maybe silver from Mexico, platinum from South Africa, diamonds, at what point does America first become America alone? If this thing just keeps, nobody wants to do business here, but, it is the largest marketplace, and it's going to be incredibly hard to replace all of that, even with 1 kilogram gold bars. So, our buddy Peter Schiff on Gold, he loves this stuff. He's already trying to sow fear and panic, and I'm sure the gold buying commercials are going to ramp up in the coming days and weeks. So be careful out there. Don't just get taken advantage of. All right? Be smart about it. And all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just because I predict things doesn't mean they'll come true. And this presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries, gold. I mean, be careful out there. Don't buy stuff from gurus. Don't buy stuff from me. If you don't, you got to trust people, right? If you don't trust me, don't buy anything. And if you desire personal financial advice, hire and consult your financial advisor. All right? That's what we got for today. Calendar has been pretty benign all week. This week, jumping out to next week. See what we got. Monday, benign. Tuesday, got some CPI. That's been a pretty good mover. Sometimes. Not all the time. Wednesday, got some crude oil stuff. Fed members speaking. Wednesday, PPI. And that was a mover last month, a little bit. Thursday, benign again. And Friday, we get the core retail sales. So they bumped that out a little bit. And then we get the more democratic-leaning consumer sentiment and consumer inflation expectations, although they've brought that back down quite a bit here. We didn't get big 7% inflation, or did we? When you, I saw a post, I think it was yesterday. Oh, they were like, so I use the Walmart app, whatever, blah, blah, blah. I've been using it for years to buy my groceries. I found a 30-item order, and from back in 2020, I think it was, maybe it's 2019. And they said, 30 items cost me like $93. And then I added, benefit of Walmart app, apparently you can just re-add the order. They said re-added it, and those same 30 items cost $163 today in 2025. They're like, that's like they put out some ridiculous amount, like that's like 160%, 173% inflation. I was like, wait a minute. That's $74 increase on $93. That's like 80% increase, inflation, not 100 whatever percent inflation. But hey, math is hard, right? 3 out of 2 people find math to be difficult. So be careful out there. That's what I gotta say. All right, how do we make money today, right? Great, JT. Monologue, gold. It's kind of weird. Like, how does that affect the gold market? How do we make money today? That's what we're all here for, right? We're all traders. We want to make some money. So yesterday I did a webinar. My 3 kind of most bullish prospective stocks over the next, I'm looking at a couple years. All right. I'm not just trading for tomorrow on these. I'm kind of watching. I don't have a position on any of them at this moment. Kind of watching these, and I thought I'd give them out here today, if that's what sounds good to you all. So Warner Brothers Discovery. This is one of those potential 10xers right here. I love the way this is potentially making a bottom. We need to see some upside action. I'll talk more about these toward the end of the show. Another one, Dollar General. I love the way this potentially made a bottom. Throw in Dollar Tree. Just, to me, Dollar Tree, Dollar General, kind of the same, almost the same pattern. This one running a little spicier. And then Pfizer is the third right here. Nice, beautiful poke through the roadmap line. Nice, beautiful retrace. Has that pattern I've been talking about. Both patterns I've been talking about all week. If you've missed that, I watch 2 main patterns, all right? And when they come together and set up, they form reversals and then set up a new trend with pullback and continuation that you can just keep trading over and over and over repeatedly. And that's what I'm looking for, right? I'm looking for a repeatable pattern that's a trend, pullback, and continuation. So, 2 main things, right? You need the pattern, and you need it to be high probability. We got that. I've discussed that this week. It's the market roadmap pattern is the high probability pattern. Now, the other piece that you need is you need to know when the trend is done and when it's reversing. So when you've got a trend and then you get a pullback, how do you know the pullback's done? If you've got a trend, how do you know the end of the trend might have just happened? Right? So that's kind of like 2 key parts. That's why the measured bounce pattern is so important. Maybe I didn't tie that together earlier this week, but this is why I'm looking for these measured bounce patterns that show up here. 1, 2, 3. I have been calling them the last couple weeks absolutely beautiful corrections. That ABC part comes from Elliott wave theory. ABC, but when the proportions are magically delicious, you get this first move down, a retrace to a 618, continuation, and then it builds up with another pattern that gives large upside potential. Now you can dive in here further, run the proportions. We've talked about it. This came out right on the point where we would expect it to. And then it hit the 50% here, which is the uprights we've been talking about. So this first move, second move, now we potentially get a third move. But we got to get that. We got to get the continuation. Right now we've got a downtrend of highs, haven't broke through. So Pfizer has a nice reversal cooking, but it hasn't confirmed. All right. So I got my eyes on those. We'll circle back, talk more about it. Let's look at what's moving today, where we're at on the markets. potentially bullish. We've been talking about these trades that I've been doing, selling some puts way down the chart. Let's look at today's. So ES, where's our support? It's kind of down at the bottom where we made the low. Why ES? It's kind of been the question this week. Like, why would you do ES and not SPY or SPX or fill in the blank? Well, these trade essentially 23 hours a day, 6 days a week. ES does. And the options for this do too. So we're looking at this being support right here. And if, now we still are in the upright here. We got this move up. We didn't make it up here. We're still in the upright for the correction. If this is the first move down, A, B, first move down, second move. If that goes for a C, how far could we go? Use our handy dandy 3-point tool. And somebody yesterday was telling me they're having a hard time finding these. It's just the third button down on TradingView. I know you can't see it on the chart, but I have the menu bar off the screen slightly. Third button down on TradingView. These two tools, 2-point tool, 3-point tool. So trend-based fib extension tool. That's the one we're going to use right here. Click on the top, click on the bottom, click on the top. This gives us our potential range for this move right down here. Now, suppose it got more spicy to the downside. We'd be looking at this number right here. So that's the extreme move right there. Likely to go much further than that. Probably not in one big gulp. Probably not in one day. Now, also looking at it, that's 320 points or 310 points to get down that far. That'd be a big move. All right, we don't typically move 300 points in a day. You can do the same thing you do on any other option chain. Come in here, look at the money, sell both sides. Market's pricing in only about 180 points. All right, not bad. And that's all the way out to September 8th. We're just looking at more recent time here. Like today, the market's pricing in about a 25 point move today, up and down. If we zoom out, look down in here, they've already pulled the premium out. So yesterday afternoon, I actually grabbed all the way down here at 60.40, I think it was, maybe around 60.40. I sold that one for like 25 cents. Of course, it wasn't 25 cents. It was, ES futures a little different. The contracts aren't for 100 shares. They're actually for $50, $50 points. These are settled in dollars, not settled in shares of anything. So a multiplier here of 0.25 times $50. You're like, whoa, wait a minute. That's only like $12.50. Yeah. That's what that gets to be. So I've been trying to get a 0.3 times 50. That would be 15 bucks right there. So you got to know your options contracts. That's why I say futures trading a little bit different rules. You're actually trading dollars, not trading shares or commodities or anything like that. So looking at Monday. Now, I'm probably going to look at this Sunday when the market reopens. Right now, if you're to go do it right the moment, Monday, remember, big drop, probably not as in the cards. We already talked about 60, 69, probably an extreme move. You could get right down in there right now. Get your 25 cents. We'll make a move down at all today. Probably get down even further. So it's interesting interesting play. Park a little money, make a few bucks. It's better than the interest rate on these mostly. Be like, what's the risk though? Yeah, the risk is we blast on down, have some black swan event, end up down here. So if you're collecting like 30 cents, you know, if you're collecting 0.3, maybe you would check it out if you got 3 times over the skis. So if it went to 90 cents, you just close it out, and then a couple days later, you make it back. Right there. This is a play I've been doing. I've done it 4 times this week. I got margin jammed up one day and I couldn't put it on. So I've played these every day this week. Start talking about them. Extra bonus trade. You may be like, well, how do you trade futures? Like, Tasty Trade is the place. Like, get the Works account. Like, you can open it with a smaller, like, little reserve chunk of money and just play with it. The margins are different. Why? You know, the big question yesterday, why this and not SPY? SPY is going to pull a big chunk of margin, more than likely, to do this trade. This doesn't. Like, they have things called day margins and night margins in futures. And day margins are kind of a pittance. Like, and when you're playing this far down it could be as low as like $2,000 to hold one of these. So, not bad. Now, if we get a big drop, like I said, you may want to liquidate it 3 times the credit you take in. So, if you like those, let me know. I've been throwing them out there in a channel for Term Market Trading Lab members. In Q, we poked through. We set up the potential to go bullish off of this move we were talking about yesterday. Got a retrace, held that 1 hour. Now, my eyes are on this move right here. If we break higher than that, probably going out to new highs, new all-time highs. All-time highs, new. I mean, kind of, we're going to probably go, you know, bust out. Look at the ES here. A little more cautious on this one. Get the high, we get the low. So we've done this move up. We didn't quite get even the bearish. We stayed in the uprights. Didn't get the bearish extension. Didn't hit the full bullish extension. And we look at the small move. You know, we did some bullish stuff, but then we got a deep retrace. Overlap, right? That's caution number 1. Move down, move up, holding the 618. Caution number 2. We might be setting up for some continuation lower. All right. This was not a 5 up. Not a clean 5 up. This little baby running consolidation thing doesn't really count. So move. 1, 2, 3. That's all I really see on that chart. For that move, this move 1 big down, this move 1 big up, 1, 2. It's really getting muddy. Really getting muddy, and cautious for another move down. Another move down would make sense. And if we just do it in 3 waves and come right down in here, if we stop above that 6140, turn back up, we're probably going on out to like 6,600. I know I got a lot of fib lines up here. Let's just remove a few and talk about upside for a second. So right now we're looking at potentially coming down to 6140. Put it on the nose right there. Just forget the lower for a moment. If we found a bottom at 6140 on another move down, and this happened like next week or whatever, the bounce potential take us right up in this zone, right around there. See those numbers right there and those numbers right there. So potential to go right up there. Activation point Want to move back up through 63.38. So we find support down here, we pop up, get the close above that level, and we look for the bigger upside. That would be what I was cooking with. All right, any questions on that one? That's kind of, so right now, a little bit biased down. Till we can prove that we're going on out right now. Not liking the way we're lower high in this baby. 3-wave moves. Sets the stage for this being an A, B, C right there. Potential bottom somewhere in this area right here, slightly lower than that one. And looking at it, top to bottom, it's about a 5% correction right there. So, yeah, I mean, so it's not bullish price action. That's what we just voided, the potentially bullish price action. That's, how do you know when you're wrong? Like, this is what I'm trying to, if you glazed over and you missed it, why is this not a bullish continuation, right? We got the 3-wave move. We hit the extensions JT was talking about for it converting bullish. We went past the 1618 on the 1, 2, 3. Should be a wave 3. Why would that void the wave 3? This high, wave 1, and that correction right there voided this being a 4-5. All right. Now we've got a swift move down that overlaps. We've got a retrace that's holding a 618. This sets up downside on the S&P. That all developed kind of overnight. In Q, a little bit different, but very similar. This one has more of a little baby 5 up into that high. This is where things get interesting, though, because this 5 up could be complete, right? This move up, not really 5 up, just a move up, a retrace, a move up. But this move up, if that was wave 3, didn't reach a proportion for it to be wave 3. Key differences here, right? We reached the proportion for that to be a correction of this initial move down. This move down, 1, 2, 3, absolutely beautiful correction of the first move, the trend, new trend, absolutely beautiful correction. Guess what happens? Trend, pullback, continuation. All these little details matter. This is why it's just too much for you. This is why you follow me. This is why. And then you ask questions. So first move down, retrace, potential to come down here. So even though this looks more bullish, if this was the wave 1, this wave 3 is smaller. It's already kind of not the way this works. And then this pullback right here, overlapping the wave 1, already voiding out that being a wave 1. This is looking more like a corrective A, B, C, 1, 2, 3, 4, 5. For the C here, A, B, and C. All right. So we've got a downside setup. Even though this tipped the proportions to bullish, the overnight price action messed it up for us. These corrections that we have here on NQ and right here on ES messed this thing up. So you always got to watch the entire story. If you're just playing on here, just looking at this, all you've got is just this weird first move up, pull back, move up, pull back, overlap, and looks like we're holding the 1 hour roadmap line coming up. Can we still blast on out? I don't know. This looks like a whole different story. Lots of gaps, lots of incomplete information. I don't like that. To me right now, that's looking more like a diagonal. Diagonals in suddenly and violently. Then we can see another move like this. And then drop out. So SPX suggesting that maybe we get a little bit more volatility before we get the downside. Whereas ES and NQ, a little bit more immediately set up for bearishness, but that doesn't negate them following along with the cash index. So why not? You know, I don't typically look at IndexX, but sloppy here too. We could push this to a higher high and then roll it over. Got sloppy price action here also. Proportions aren't clean. Could be the first move down. We actually push this slightly up here and then bottom out again right down here around 22.5. Russell. This is why I have the hedge on for September. Looking like more immediately bearish here. Look at the daily charts. Got our first move down to the roadmap line. Retrace, holding the 618 of that move down. First move down, retrace. A, B. Next move C. If you don't have a hedge on, could be a nice opportunity on IWM today. Go out at least a couple weeks. I'm in September with it. If we stop right here, that was a correction and we might actually go higher. If we stop down here, bounce. My chili pepper's kind of in the way. Move her over. We stop right down in here. Bounce. Hold below this low right here. Continuation. And then we set up a potential for even bigger continuation lower. This being potentially an A wave and a bigger B wave and a bigger C wave that takes us down even further. And that might last past September because September's just coming up right out here. But if we got some sort of crash that took us well into the deeper numbers here, that hedge might pay out quickly. Oil. Step to toe across. If we can get the close below lower 50s. Been harping on this for what? 2 months now. If we can get below it, we're going lower than this low back here. For those of you who have no exposure to, if you want exposure to oil, buy a couple shares of this baby. Potential to come up to 22, 23. Now, if you don't think it's going to work, fade me, buy a couple shares of this baby. Think I'm full of crap, don't want to fade me, buy some UCO. This will go up with oil. Right there. Gold, popping on that news last night. I mentioned that we might go retest the high. Before we drop it out. Silver still holding that A, B, C potential. Gold didn't actually void any ABC. This is very sloppy. It gets into a more complicated correction. That high didn't void it. It's just not going to be impulsive to the downside. It's just going to be a correction. And likely we get another pop down somewhere in the vicinity of that A. That's the higher probability thing right now over just breaking out and running higher. Now it can break out and run higher. Kind of negated the immediately bearish setup here a little bit with the more gusto. So we've converted it more into a flat, as they call it. And that may push it just right down even with this A we got back here. So we got to watch this, watch that low. We may come down here and double bottom it, maybe slightly lower low, and then take off again. That would be what I'm watching out for gold right there. The length and duration of this consolidation has me expecting that one more spike down. Bitcoin, it got above the level I was watching, right? Got above the level yesterday. I was watching that 116,000 level. Can't get that line straight. We bottomed over here. Pushed above, back tested it, pushed above again. So now we got to watch this high. Right up here, about 100, right near 120. Push up through that. We're going on up. Target right up in here, 125, 126. So that's the next resistance levels right in there. Get through that. Coming on up. Bias up at this point because we broke above. Like this should be finished on the downside. First move up, retrace. This next move up should take us on up into that resistance right there. Pull back, hold above that line, and then get the next move up. That's what I'm looking for. On Bitcoin, Ethereum turned itself around pretty good here. Get a nice little pop. Taking it on up. Like that was beautiful right there. Bounced off the 618, retraced, held, popped through, getting the extension 40.25, 41.08. Next extension up. Then we'll see if we can manage to get up to that 4080 area or 4800 area right up in here. That's the key to me. Like if we reject that hard, break down past all this stuff, it's over for Ethereum. If we can get through that area right there, probably going to go on and set new highs, probably up around 65 to 7,500. But it's got to prove that we're going to do it. These levels to these levels. Somewhere up here. But we got to get through that key resistance level. Why is that the key resistance? Right at that prior high. Because when we zoom out and look at the daily charts, it makes a big first move up. A, B, C. It's right there. It's right there. This was a deep retrace off the first move up. Deep retrace. That extension puts it right there, 4,800. If we reject that, start breaking down through the support levels, probably go on lower low than this move back here. That's the level to watch right now. NKD, global liquidity, pushing on out. This is likely to push everything higher if we break out past that July 2024 high. We set the stage to come on up possibly to 50,000. It's global liquidity increase. pull everything up with it. Float most boats. So this is positive going for us. If we can break out above that July high from last year, very positive. Take everything kind of higher pretty quickly. Dollar just chopping around in here. We did an overlap, right? Clear, crystal clear, three-wave move. First move, second move, A, B, C, right in between the uprights there. Trend was down. Pullback, continuation goes lower. More than likely, we're going to make a lower low than that low in June, July, right there. Now, it's possible that it does some other weird crap, that weird longer corrective thing that takes it a little higher before we do that. It's possible, all right? We don't have to drop from here. It's possible this is just part of a bigger correction. We get this move up like this, we get a move down like this, and then we get another move up like this. It goes a little higher, and the dollar index loves to prolong the correction. I mean, look at this. This big rip right here, and we've been doing nothing but correcting that ever since, and we haven't necessarily finished it up yet, because first move down, retrace, second move down, would put us down here in the low 90s, and we just got to the mid 90s so far. Though this correction could be done on dollar, but it might have some more legs and last another 6, 8, 9, 10, 12 months. I don't know. Timing is the hardest part of all this. Getting the levels right, easy part. So more and more I like shares and stuff that doesn't depend on time. Looking at Apple, poking up into that 618 zone. We're in the uprights. A, B, C would be the correction. So this is important right here. Do we blast through? Suggesting that this is no longer an A. This was all of the correction. This is just a sloppy something. I don't know what to call it. Entirely possible. I'm very cautious right now. That's the first move down, a retrace. Any weakness in the market, like if NKD fails for whatever reason, this can go down the toilet pretty quickly. Saw it go down the toilet pretty quickly over here. Amazon, retrace to the roadmap line, held, doing bullish stuff. We fill that gap back up. Potential to come on up here, 257, possibly 271. Google, if we can fill that gap, which is right back to the all-time high, 220, possibly 230 on the upside. Meta, still grinding it out here. Needs to touch that 793, finish this up. Just get a little sparky action right there, touch that, and then we can do a bigger correction. Microsoft came up right under that 1618. Pulling back. We may see this drift on back down. Hit some fib levels of support before we make another attempt higher. And it could retrace it all the way back down to the breakout down here. That breakout right back here. And this did an A, B, C correction right down here, then shot up right to the target. Beautiful expansion of money right there. If you had caught that low just after Liberation Day, potentially 60% gain right there, 61% gain on Microsoft. NVIDIA, we're grinding right above that 1272 level, 1618 up there at 212, and we might see that pop if global liquidity pops on out. NKD breaks above the July high. That would be my target on NVIDIA right there. Tesla. Oh, oh, oh. Can we stick the breakout? If we do, if we get, like, we got to confirm above that last high right here in July, just a couple weeks ago. We break above this high with a close, this thing starts being likely the rocket ship. Now, we may see it come back and back test. That's very classic. See it push up, run out of steam, come back test, hold, and then is the big move. This is one to keep an eye on right here. Watermelon seed squeeze might get continuation higher. Of course, it can be a fake out too. Can fake out, suck people in, and they go, oh, suckers, gotcha. See that plenty of times too. It's very unreliable. Bounce off the wall, just like a watermelon seed squeeze. You know, squeeze those watermelon seeds, pop it, bounce off the wall. Netflix still likely to get that next move. Now, it may retrace up to a 618 before we get that next move, but roadmap line, highly likely. You see, we did that kind of over here. We came up, missed, retraced, came down and hit it. Missed, retrace. Maybe back up to 1260 and come down and hit it. Could be even up to the top up there, 1285. And then still come down. It's a correction. I don't play corrections that often. Now, stuff that was moving today, I go pull everything moving $2 more up in the pre-market, put it on the gainers list, down $2 more, put it on the decliners list. Then I bring a few potential setups. And like I said, we can talk about the bullish stuff at the end if you want to. Kind of running long here already. Remember, give me a thumbs up, subscribe if you want to be a part of this. Every day I do this. Go through looking for opportunity, looking for market patterns, trying to teach you a little something about how price moves. Nice pull back, pop out. That one's probably going to pull back at some point. NTRA, chopping in here. If we can pop above that, looks pretty good for an extension. Let's just remove the prior drawings since they're all off the screen. Got this high, we got this low. We're sitting right here with this consolidation. At this point, we have a move up. We have a deep retrace. And this may pop up to right here, fail to break out, and go down again. A, B, C. And this being an A, bigger picture, B, bigger picture, and a C, bigger picture. 2X on Rocket Lab. That reported earnings, didn't it? There's a reason I jumped off of that. Let's see. AKM. That was reporting earnings. Oh, we were popping. Now we're dropping. My 65 put. Probably. I wonder if it closed. Let's see. Did we close? Not yet. Still sitting there with a little money on it. It's sitting right at my price. Last trade was at 2 cents. You're at 1 cent. We'll see. That one should close out. Got $7.50 to the strike. Alrighty. Next up, DJT. Lots of people slamming on that one, but hey, held a higher low. So far, break it back higher. If we break it back above this, probably going to come up, test the roadmap line. Then we'll see what happens. I may jump off at the roadmap line. Don't like, personally, I just don't like the depth here. So if I get back above water, back above 20, I might be off of this one. It went from having a really, really nice potential setup, holding in the uprights, to calling that into question at this point. So less awesome. I'll make a decision on the fly there. All right. Let's look through, see if we can find anything interesting. Looks like that's coming on down. Lily was a big loser yesterday and still sitting down here. That was so all the way back over to here. A, B, there's the C target right there. It just had a very volatile way to get here. That's not very C-like. This may have more downside to go. That's the caution here. The way it got here doesn't look impulsive. That doesn't look clean. That doesn't fit the definition of a C wave. Even though we got here, it could do something deeper, unless possibly this wasn't an ABC and this was all just some sort of complicated corrective crap that W, X, Y, but the Y still isn't impulsive. So this one, not really on my bullish list at the moment. Not really feeling that bottomed out at this moment. And NVO made it all the way down to the extension, making a first move up. I gotta see. That doesn't give me a lot of confidence that that bottom is in place with, look how many red candles there are right there in that bottoming. How many green candles there are? One green candle. A bunch of reds. See that same sort of thing here. Bunch of reds, 3 green candles. Maybe this bottomed out. Retail was bailing like crazy. Hedge funds in the last quarter have added millions of shares to this. Smart money is not usually very wrong. This one might have bottomed. There is potential we dip one more time to 225, but this one might be bottomed out. Hopping around, trying to look for opportunities, things I know potentially bottomed out. I'm not usually a big trader of healthcare, but XYZ, if we can break out through that gap, 110 on the upside. PayPal failed its attempt right here, had that gap down. Resistance also. This might be going down. A, B, C. Let's see. Rose was on the setup list today after that pop yesterday. I'm very cautious here. I am bearishly inclined because that looks like an A. That looks like a B. We held in the uprights. First move down, retrace. 1, 2, 3, 4, 5. Let's see. Be very cautious here. Playing that bounce setup today. Well, that one's probably going on down. We're right at the limit here. Playing in the uprights. Get below the uprights. Probably going down here. Probably. Doesn't have to. Probably. GoDaddy. Oh, look at that. Right to it. My friend Scam Likely keeps calling me. I wish I could just block all Scam Likelies. You have to give me another app to run the phone. Not sure what scammer got a hold of my number, but they call like 10 times a day now. I should never have said anything about never getting any phone calls. Baba still likely to roll. Has not been able to break above. Abbott Laboratories. Now this is interesting. A, B, C. Just a little shy. It's okay. It was, sometimes you can be close enough if when you met the criteria lower low, right there. You met the criteria for an A, B, C complete. This move up, definitely looking like we're going on higher. Right there. There's the potential setup, 125. HCA. Here's the potential setup, that high, this low. Nice bullish momentum, 401, potential upside. PINC, Premier. Here's the high, here's the low. There's the close above, 23.94, potential right there. Market chip. Dipping in there. So we need to hold, on this one, we need to hold this zone. Well, I already got a big line there. We need to hold this line. If we get below that line, we're probably coming back down to the bottom on microchip. Pins. Yeah, that took a turn. Lower high, lower high. If we hold here and turn higher, we can break out of this funk. Big resistance here. Target up here if it can be bullish. It has the bullish setup. See, we did this move up. One A, B, C. Held in the uprights. Move up. Hold bullish. Break out. Continuation. A, B, C would be right here. So first move down. A. 1, 2, 3. B, and then we'll see what happens. Break above this, bullish, bounce off of this, bearish, and then going lower low than this back here. That's how you do it right there. All right. Thanks, Dave. I appreciate it. Everybody, thanks for coming. Thanks for hanging out. I'm going to go look at the real markets on my other machine, kind of see what's happening, crapping. If there's any trades I can put out for anybody today. And I'll be back on Monday. Same bat time, same bat channel, 9:15. We'll go through the markets again, dig through it, try to find some stuff. Hope you have a great day. I gave you my 3 bullish ones. If you want more information about those, we'll dig through it. Have a great day.